Hello everyone and welcome to today's morning report on Wednesday the 1st of October with me, Richard Perry, market analyst at Handtech Markets. The European indices have started fairly mixed actually, and that's come with the PMI data that started to filter through. You've had overnight the Chinese data, the Japanese data, and we're now getting through the European data as well. For the Eurozone countries, China actually stayed around about in line with last month on the official 151.1. Japan slightly reduced on last month, which is down to 51.7, so still above 50, so that's a reasonable positive. The out of the Eurozone though, we had a couple of good ones actually. Spain and Italy were ahead of expectations, and Italy back into expansion mode above 50, but the big disappointment I suppose would be taken from the German data that came in 49.9. That's the first contraction in 15 months on the German manufacturing PMI, and was below expectations as well, and is a rather disappointing number there for the big powerhouse of the European or Eurozone economy. We're now looking forward to the UK manufacturing PMI at 9:30. 52.5 is the expectation there, and we'll see how that goes. But in terms of how things are panning out for the dollar today, we're still looking for dollar strength. That still continues to drag the dollar index higher, and pretty much across the board the dollar is having a positive day again, and that euro has certainly reacted to the disappointing German data. The euro is now back below 126 against the dollar, so and again further weakness in that euro, and it's looking pretty disappointing. But interestingly though, if you look at volatility, the VIX index continues to move higher, and that must be a little bit of a concern for investors surely, because that suggests that fund managers are certainly looking for downside protection on their portfolios, and it could be the fact that there is a correction on the way. But certainly at the moment, the S&P 500 is holding up still reasonably well, just a slight bit of downside yesterday, 0.3%, but the FTSE in the open is 0.5% lower. DAX is around about flat, as is the CAC, but certainly this dollar strength continues to be a major story here. There is as I said, a lot of data going on today. Here is the UK PMI manufacturing data for the last few months, and it's expected, as I said, to come in flat at 52.5, so that would arrest a bit of a decline that we've seen recently. We then move on into the US trading session, and we look at the ADP employment number. It's actually forecast to come in slightly higher at 210,000. Last month, the ADP didn't really give us too much of a good indication on non-farm payrolls, but we'll see what happens again this month. But recently it's actually been alright until last month, so we'll see how that goes. But in terms of the US ISM manufacturing PMI, 59 was the last reading, 58.5, so basically that remains pretty strong on the expansion in the expansion data there, so it looks as though the ISM number is going to stay pretty positive. The key chart of the day that I'm looking at is the euro yen, and that's going to have been impacted significantly actually in the last few minutes by this Eurozone PMI data. But I spoke about euro yen last week, and it fell away from that 140 mark, and I said last week that it would come back and test that 138. It did that yesterday, bounced pretty much off that level, so that was an initial support level, but I think that the pressure is going to continue, because you look at these momentum indicators all in decline now. Also, you've got a crossover sell signal on that MACD, on the MACD lines as well, and in a neutral market, which is pretty much is now on the euro yen, with all these moving averages going sideways, you would suggest that a crossover sell signal would be indicative of downside pressure, and that is still what we're getting here. I think we're going to get pressure on this 138 level. If you look on the intraday chart, you'll see a series of lower highs over the last few days, And I just think that 138 is going to be seen now. That 138 level is key, because that is, I think, a bit of a line in the sand between neutral and turning more negative once again. So if it consistently drops below that 138 level, I think we're starting to think about a more negative outlook once again. 137.50 is also a bit of a support area as well, but I think that if we start to see a 137 handle on euro yen consistently, I think that would suggest that the bears are regaining control and we could see further downside. Anyway, I wish you good luck in your trading today, and I will speak to you later. Thank you.